Welcome to Business Incorporated live on Channels Television, your daily window into the world of markets, money and global economy. Here's what we're tracking today. South Africa's manufacturing sector slips back into contraction, the first in 9 months. Bank of Zambia unveils new 100 kwacha and 50 kwacha notes. And price of milk skyrockets in Nigeria. Now, great to have you for this half-hour show. I'm Will Ibang. First, let's check in on the markets. And as the commodities market, we start with oil space, where oil prices climbed on Tuesday as the Ukraine war raised doubts over Russian supply and uncertainty lingered about U.S. energy policies. We see Brent traded at $69.29 a barrel, up 1.67%. We see WTI also rising nearly 3% to $65.82 a barrel. That's 2.83%. Now, we know that WTI futures did not settle Monday due to the U.S. holiday. Now, investors are also awaiting signals from a key OPEC Plus subgroup, including Russia and Saudi Arabia, which meets September the 7th. And the group recently sped up the unwinding of a 2.2 million barrels per day production cut, but is unlikely to change course this week. Let's move to the metal space now. Let's see how gold prices fared. We did know that over the night, gold prices scaled to $3,500 per ounce to hit a record high on Tuesday as mounting expectations for U.S. Federal Reserve interest rate cut this month lifted demand for the precious metal. We see spot gold steady at $3,476.48 a barrel. That's unchanged. U.S. gold, we see it up 0.9% at $3,546.80, and spot silver also up 1.74%. That's nearly 2% at $40.50 per ounce. And now we see platinum also up 2.9% at $1,410.10 per ounce. And we also see palladium up over 3% at $1,158.50 per ounce. Now, that's good news for metal space, but let's come back and talk about other commodities. And we have powdered milk, an essential commodity, has become one of the most consumed dairy products in Nigerian homes, yet prices rose 35% year-on-year to 4,600 naira for a 400-gram sachet. That's a little sachet, while annual milk intake per person stands at just 4.7 liters compared to 52.5 liters in South Africa. Now we have joining us Faisal Sani, analyst financial derivatives companies, to discuss this and give us more insights as to what's going on. What's driving this price? Good afternoon, Faisal. First of all, what's driving surge in powdered milk demand and prices?
I'm sorry, I didn't get that.
So what's driving the price up for powdered milk? We see it up 35% year-on-year. What's driving this surge amid, low demand in the market?
Okay, so compared to substitutes like evaporated milk and fresh milk, powdered milk the price of powdered milk is relatively lower, making it more attractive. And then we can also see that the preservation cost of powdered milk is also lower because you don't have to turn on the generator to turn on the fridge to preserve powdered milk. So that's one of the things that is making it an attractive substitute. Now, we're nearing back to school season. A lot of parents believe that milk is the higher you take milk, the better the grade. So a lot of parents are increasing the amount of the milk that they demand. So we can see there's rising demand in milk there. Then also inflation also affects distribution costs and production costs. So things like that also pass through into retail prices.
Okay, but we see producers are also reducing the pack sizes so that this powdered milk can stay affordable. I know I used to buy a sachet, maybe 400-gram sachet, but now it seems like I could even touch maybe like the bottom of the sachet. I can feel the milk there, but it's not a lot anymore. With inflation squeezing incomes, is this strategy by producers really helping the consumers?
I'm sorry.
I mean, the
What?
producers are reducing the size of the packet of milk that we use these days. And we know that inflation, we go to the market. Yes, inflation is dropping. When we go to the market, still we have high prices for commodities. But the reduction by producers, is it helping households?
Okay, so producers reducing the size of the quantity of milk that they sell, they are trying to mitigate increasing prices and also reducing costs. That's why they reduce the quantity of milk that they want to sell. So we call that concept, it's called sachetization, and that is when, in this case, when producers reduce the amount of milk that they are selling. So sachetization has addressed affordability and accessibility concerns. Lower income households are able to participate in the milk market. However, I don't think that it is. I don't think it is sustainable because consumers end up paying 40 naira more when they're buying the smaller sachets than compared to when they're buying the larger sachets. By the time you multiply it with consumer habits of buying in larger quantities, the gap widens. So because of that, it strains consumer budgets. So yes, it does address affordability and accessibility concerns. However, it does still strain consumer household budgets.
Okay, but looking at milk intake now, even how many Nigerians really drink milk, you talk about the prices of milk really skyrocketing and staying elevated. Our milk consumption, especially in Nigeria, remains the lowest, globally. What practical steps can help boost consumption and improve, milk, households' access to milk?
Okay, so one of the reasons why Nigeria has a low milk consumption intake is because one of the reasons is because inflation has eroded consumers' incomes. Because of that, consumers can't buy as much milk as the rest of the world. So for for Nigerians to be able to afford more milk, inflation has to come down. Another thing that can help with milk consumption is when in encouraging domestic production of milk. A majority of Nigeria's cattle herd population is in the north. If we can curtail insecurity, there will be spillover effects which would boost domestic production in milk. When we see increased production in milk, there will be surplus of milk, which will reduce the prices and make people be able to afford more of milk.
Thank you so much, Faiza Sani. I do believe that maybe this thing is also linked to livestock production in Nigeria. If we can get our cows, all ready and maybe have a huge, or maybe a large amount of cows that we rear and breed in Nigeria, maybe this would help, especially for domestic consumption of milk. Thank you so much, Faiza Sani, analyst with Financial Derivatives Company, for your perspective.
You're welcome.
So let's move on to other stories now. We see Egypt will spend $400 million on a new pipeline, but that's a story for another day. But let's look at South Africa very quickly. South Africa's manufacturing sector has slipped into contraction, raising hopes for fresh economic concerns. Now, ABSA PMI fell 1.4% in August to 49.5, reversing July's brief expansion. Now, that's the first in 9 months. Now, new sales orders dropped sharply by 8.5%, while business activity also stayed in contraction. Analysts cite weak demand, tariffs weighing on exports, and growing competition from cheaper imports. There was a slight improvement in employment, though. It remains below growth threshold. Input costs also eased modestly, helped by a stronger rand, trading below 18 rand to the dollar. Now let's see the Bank of Zambia. It has introduced the new 100 kwacha and 50 kwacha notes under the Heritage Series, featuring stronger security, cultural designs, and raised ink for the visually impaired. The central bank says the notes will boost confidence and replace old ones, which are being withdrawn. So far, 9.9 kwacha, 9.9 billion kwacha, worth about 44% of those in circulation, have been phased out. And a new mobile app has also been launched to help the public identify genuine notes and support a smooth transition. Now it's time to check in on the markets and see what sentiments are permeating in the Africa space. We see negative sentiments for African markets at intraday. NGX is down 0.09%. South Africa, we see trading lower, also 0.57%. I wonder what's happening with the markets now. A lot of profit-taking, sell-offs going on in the African market space. Egypt is also down very quickly. You see that on the screen, 0.23% at intraday. We're hoping that the markets will be rebound at the close of business. But Kenya yesterday traded in the green, opened the first trading day in positive territory. We see it up 0.6%, climbing up to 173.64 points. Now we have, let's drill down to what's happening on the floor of the exchange. Why are we having persistent negative sentiments? Ambrose Omodian, Chief Research Officer, Invest Data Consulting, joins us to share this. Ambrose, good afternoon.
Yeah, good afternoon.
We've seen NGX kicking off September bearish.
Hello, good afternoon.
Good afternoon, I can hear you, Ambrose. You see, NGX kicked off September bearish, October closed, August bearish. What are the key factors weighing on the markets?
The audio is bad. I didn't hear you. Can you come again? Sorry.
What are the key factors weighing on the market? We've seen markets opening the new month of September in negative sentiments. We also see closed October down. What's driving these negative sentiments? Or what's weighing on the markets right now, Ambrose?
Yeah, actually, what we're seeing is part of market dynamics. There's no need of flogging the negative sentiment. After market are rallying for straight, 5 months, especially that in the month of August, September, after August, that kind of a pullback to gain marginally. Then this start of September, we expect to see a mixed market, and the first trading day we have seen a negative market. But for me, there's no cause for alarm. Look at the volume that put the market up when the market was rallying. The same volume is not there now, bringing the market down. It tells you that many investors are still sitting to watch activity that will unfold in this month, especially this is a month that we expect to see some recurring data that will give investors insight, coupled with the expected MPC meeting that's coming this month. For me, the start of September up and down or red, for me, it's not a big deal, but we're expecting to see, let those companies that are here to release their audited account, especially the banking that paid the interim dividend that are delaying. Don't forget that in the history of our market, in the month of August, we're expecting to see the early filers of these banks releasing their number. Up to this hour, none of the dividend paying banks in the market has released their number. That is a concern of many investors. I believe that it's time for also the regulators to consider things that is very, very important at this point. Why I would say that the same banks came to the market to raise their money after the central bank said, oh, this bank that has which retained earnings should not go back and use the retained earnings to recapitalize. It should go back to the market. And the investor, out of the confidence they have in the banks and also in the economy, they came out and injected their fund into this bank. Then expecting that this bank that paid into the dividend expect to reward these shareholders. At least their half-year result and also at the end of the year. Until now, they've not seen the result. I think that is the concern we're seeing, that most of the banking accounts are in red. But I believe that the fundamental of those banks still remain very strong. A pullback in those banks provides an opportunity for investors to key into their price, because in this market it's buy low and sell high. That is the mantra. And also, if you understand how to do that, you make money in stock market in any direction, either in a bull market or a bear market.
Do you think that this delay in the bank results is what is really causing the cool-off we're seeing in the overall equities markets?
The question is not clear. The audio is very bad. I'm trying to hear. I didn't hear you.
I said the banking stocks, do you see the delay in their results? Is it what is causing the pullback we are seeing in the market?
Yeah, no, I'll say that the delay is part of what is affecting the investor sentiment as we speak. And also, if you look at the history of our market, each month has their own characteristic. September comes with a mixed characteristic, which also I'm not surprising at the beginning, in red. It's expected that towards the end of September, we expect to see an up market, because that is the time many of market players, both traders and investors, will be positioning forward for the third quarter earnings season that will come, that will kick off in October. But good thing is that the Policy Manager Index that came yesterday from Stanbic IBTC shows that yes, their business activities is still expanding, about 54.2. For me, it's a good one, it's a good sign. But I think inflation will also determine what the CPI will be doing. But an economy that wants to achieve 4% GDP, it is time to start bringing that cost so that you can drive growth and also expansion in the economy. But all eyes are still what is happening in the economy, because those big central banks of the world have already given sign of cutting rates in September. Are we going to go in that pattern, in that direction? It depends on our policy managers here in Nigeria. I mean, with the MPC meeting or MPC committee. Yeah.
So do you see the markets, reversing and going to the green at the close of business?
No, for me at this time, this provides an opportunity to buy low and sell high. There's no cost to allow. Let investor invest with knowledge. It's not time to follow bandwagon. It's time to know who is really intelligent investor or who are just following bandwagon. They pull back. Most of the leaders in most of the sectors are bouncing back easily, like you can see, and also they are still also maintaining some stronger defensive nature with their fundamental and their price. For me, it's time to keen to good company that has value. Also the upside side, the upside. It's also a good one that you can make money at the end of the day. Especially, don't forget that the last quarter of the year is the most active quarter anywhere in the world, and that's what September will usher us to the last quarter of 2025. For me, there's no cause for alarm at all.
Thank you so much, Ambrose Omodian, Chief Research Officer, Invest Data Consulting, for your insights.
Thanks for having me.
So let's move on to other markets now. In the Middle East, we see Gulf stocks traded mostly positive at intraday. Dubai was up 0.22%, and Abu Dhabi was also up 0.24%. Let's look elsewhere in the region. See Saudi bucking that trend, trading down 0.24%, and we see Tari index reversing that and trading in opposite direction, up 0.2%. Now let's see in markets in the U.S. Stock futures were lower today, with investors weighing the latest developments on the trade front to kick off a seasonally poor month for equities. The Dow Jones Industrial Average futures, we see it falling 0.4%, S&P 500 0.5% down, and the Nasdaq 0.7% down. Now, these moves come after a federal appeal court on Friday ruled that most of President Donald Trump's global tariffs are illegal. The big event traders are going to be watching out for is the release of the August job report on Friday and how it will influence the Fed's interest rate decision coming mid-month. Let's see Asia markets now, how they perform and how they close today. Asia markets, they ended mixed. Investors assessed developments from the Shanghai Cooperation Organization Summit in Tianjin and uncertainty over U.S. tariffs following that federal court ruling against most of President Donald Trump's global levies. Now, Japan's Nikkei 225, we see it's up 0.29% at 42,310 points. Kospi in South Korea also up 0.94%. That's nearly 1% up. But in China, mainland, and in Hong Kong, we see the Hang Seng down 0.47%. Mainland China also in the red. We see it down 0.45%. India edged up, however, 0.07%. Now, looking at markets in Europe, we're going to see if they performed any better. We're going to be checking in with Lars Alter in Berlin. Lars, good afternoon. How are you doing today?
Yeah, how you doing? Good to be with you, Will.
Lars, what's going on in trading, especially with latest inflation data we got from the Eurozone? Over 2%?
Yeah, I have a hard time understanding you, Will, but I think let's talk about the markets here a little bit. And I can tell you, looking at markets here, it's really all about inflation, similar to what you just said when you reported on the American markets here. We got the latest data out of Brussels, and EU inflation is up 2.1% for the month of August, and that's a tad higher than expected at 2%. But what's more important is that it's also a tad above the ECB's inflation goal, which also stands, of course, at 2%. Now, we're not dramatically above that level, of course, and we're actually quite a bit lower if we take out the volatile food and energy sectors. That's what a lot of economists are actually pointing out. Then again, why would you disregard those? After all, people and companies have to pay these prices every day as well. Anyway, well, what this all means, most likely the ECB will keep its current interest rate stable next month, as they did last month already. So the time, it seems, of lowering rates is over for now, and that is putting some pressure on markets here. The DAX is currently down almost 1.5%, and other European markets are lower as well.
Definitely, markets players have been looking forward to more rate cuts, but right now it doesn't seem that that's going to be happening. But we've talked about weaknesses. Let's move on to that in the German's economy a couple of times already, and it's left the government with less tax income and the hole in the budget. Right now, we see Berlin is working on its new budget. What can you tell us about the process there, Lars?
Well, it's an arduous process for sure. Right now, the budget deficit here stands at around 30 billion euros. Not exactly surprising after the country's been plagued by a rather weak economy, like you said, lower corporate profits, and of course, lower corporate taxes as well. Now, at the same time, the government has been spending lots of money, some of it on Ukraine, some of it on migrants who've been moving here over the past decades, some of it on other social spending. Now, the budget hole is getting too big. Actually, some experts are warning that the deficit could double, that it could rise to 60 billion euros by 2028. Now, usually there are, of course, two ways you can fix a budget deficit: by either bringing in more money or by cutting spending. And of course, the governing coalition can't agree on what to do. Chancellor Merz and his Conservative Party want to cut social spending. And it's true, there is probably room for cuts there, but the coalition's junior partner, the Social Democrats, aren't willing to cut. They argue for higher taxes for the highest income earners. That, again, is something that the chancellor doesn't want to do.
So what's the way out of this then?
Well, you know, if I knew a good way out of this pickle, I guess I could probably run before Chancellor myself. Well, I guess in the end, they will just have to find some middle ground. There must be some tax hikes, because without those, you would not get the Social Democrats to agree to any cuts. The Social Democrats, by the way, are in charge of the Treasury, as well as some of the other departments that deal specifically with labor and entitlements. So them being on board in this process is actually crucial. Also, tax hikes at the top can apparently not be entirely avoided, say some experts, because the numbers just won't work. Lars Klingbeil, who is the Secretary of the Treasury here in Germany, and he's with the Social Democrats, he says that cuts alone will simply not be able to fill the hole. Some reforms are currently in the making too, including allowing seniors to work and earn some money tax-free on top of their retirement. There's ideas to allow companies to use their employees more efficiently. And plans like that, you know, could potentially boost the economy a bit, which would lead to higher corporate tax income. But it can't just rely on that either. It's been tried before and often failed. In the end, the parties will have to find some common ground, because they certainly don't want the coalition to fail, because that would lead to yet another early election and likely do nothing to get closer to any solution.
I will definitely keep track of that development. Thanks so much, Lars Alter from Deutsche Welle. They're always keeping us in the loop. Thank you so much, Lars.
Thank you, Will.
Now let's check in on the crypto market now. Bitcoin, we see trading, you know, above that 110,000 mark plus range. Let's look at it on the screen there. We see Bitcoin, you know, making that turnaround from earlier dips and supported by liquidity inflows. That said, rising technical indicators like the RSI warrants cautious optimism, while BTC gains traction. Other tokens like Ethereum and XRP are under pressure, pointing to a Bitcoin-led crypto market for now. Let's see what's happening in the news now. We see the Trump family amasses $5 billion fortune after crypto launched the digital tokens back in the Trump family there. We see that currency falling, that World Liberty falling in value on Monday in their first day of trading. Let's look at more on that story. The World Liberty token is also known as WF. That's the dollar WLFI, was sold to investors after the Trump family and its business partners last year launched the venture, a decentralized finance platform that has also issued a stable coin. Now, reports show Trump family amassed $5 billion fortune after that crypto launch. Now, let's look at all the stories now making the news. We see in the markets now, we see Bitcoin, we see the crypto industry face substantial security challenges in August, with hackers exploiting vulnerabilities to steal a total of $163 million across 16 incidents, according to blockchain security firm PeckShield, and this is up from July's $142 million, showing that attacks are becoming more frequent, showing that attacks are becoming frequent and technically sophisticated. Now, look at other markets now, other news. We see Ripple unlocks $1 billion XRP. That's really a very strong story to talk about now. You see, Ripple has unlocked billions of XRP from its escrow account in its routine monthly release, but it's with an unusual twist. While 1 billion tokens were initially scheduled for release on September the 1st, only 300 million XRP valued at about 830 million entered circulation after 700 million tokens were returned to escrow. Now, the move reflects Ripple's continuing efforts to balance liquidity with transparency in the supply of its native token. And that's a lot going on in the crypto space. Bitcoin is still trying to rally there, coming out from that, pullback we see. But we're hoping that, the markets will definitely speak for investors, and investors will definitely be happy. But that's all a wrap on Business Incorporated today. We'll see you tomorrow for another edition. I am Will Ibong. Bye for now.